I think the thing most people pursue wealth for is freedom. It isn't so much that they feel they need to drive around. After you have, I have friends that have got so many Lamborghinis that it doesn't do anything for them anymore, right? And it's really the freedom, I think, that people are looking for. And that's what escaping the rat race means, is that, look, I can provide the necessities of life, food, clothing, shelter, medicine, some fun, some lifestyle without daily toil and working for money. And that the things I purchased, because of the things you're buying today, you don't have to toil tomorrow because of the things you buy today. So I would say the first thing to understand is a financial statement. And the best way I know to learn a financial statement is to play the game Cashflow. That is the best way, adult, teenager, even my young kids, that's how they learn a financial statement. And there's three things that an asset can do, three things you can buy to manipulate that financial statement. You mentioned the first one is you can buy something that produces cash. And this is why investors like Warren Buffett prefer stocks over gold. Gold doesn't create, gold doesn't serve. Gold sits there in a vault somewhere in the dark, protected until you sell it, right? It can't produce anything. You mentioned that Robert uses real estate to get out of the rat race. Well, real estate produces rent. It creates new cash every single month. It creates rents. If you have a big commercial building, you have your vending machines and your laundry, and maybe they charge extra for parking. There's all types of little perks that can bring in cash, where unlike a piece of gold. So if you look at the house itself, that's just like gold. It sits there, goes up and down in value. The gold sits there, goes up and down in value. But with the real estate, if you use it as a rental property, now you're serving the public. And I'm going to, if some people jot down notes when they listen, because it helps them remember what we talked about and learn it better, that'd be something that might be noteworthy. This person might jot down. It says, what does the asset produce in terms of serving the public? How does the asset serve other people? I know that Buckminster Fuller, he said, the more people we serve, the more effective we become, and consequently, the richer you'll get. So the reason that Warren Buffett prefers a stock over a bar of gold is that stocks produce things. They make things. They're companies. If you own Pfizer, you're creating vaccines and serving the public, or you're creating Neosporin, whatever Johnson and Johnson, you're making baby powder. Hopefully it doesn't cause cancer, right? Stuff like that. If you are any company, Apple, you're producing iPads and iTunes and iMovies. And so the first thing to understand is you can invest in stocks the same way you can invest in gold or real estate. You could say, well, I'm just going to buy this stock and see if the value goes up. I'm going to buy this house and see if the house value goes up. I'm going to buy this gold and see if the gold value goes up. That's one way. But another way is I'm going to invest in something that will produce new cash. In addition to the value of the asset going up, it's producing cash. In the case of real estate, we call that rent. In the case of stock, we call that dividends. And essentially, Greg, isn't real estate just a business? You're just in the housing business. And so if I buy Apple, I have things to sell. I provide, a iTunes subscription. I provide movies every month that they subscribe to. If I have real estate, I'm providing housing every month that someone could subscribe to. So it's this idea of producing things for others to consume and being a producer in the world rather than the consumers. That's how billionaires think. Billionaires think, how do I produce rather than consume?
So Andy, Robert always says, and I gotta be honest, when I first started the Rich Dad Company, it kind of messed with me a little bit. He said, capitalists are generous. And I think that's kind of where you're going is by producing, it almost doesn't matter what you're producing, but since you're producing, you're actually making something for others. Is that where we're going? Because I got to tell you,
I would agree with what Robert's saying. Generally, my words would be more specific. I would say capitalists should be generous if they want to be most successful. I don't know that all of them are.
Okay.
I think you can find really good and bad capitalists. You can find really good and bad, consumers. But the idea is production, isn't it? So if you look at people like Henry Ford, you can look at them in the light of, that greedy, rich son of a gun. And you say, boy, the guy changed America. He developed the assembly line. He just, you can look at a guy like Steve Jobs, say, what a greedy, rich, awful person. He gave a window to the universe to children through iPads. How hard is it to make 300 million iPads and distribute them to the world? That's hard to invent, create, and distribute. So it's all in how you look. I think that people who serve is a big deal. So the first thing you can invest in is things that produce cash. The second thing you invest in is things that just go up and down in value. And the reason that the stock market gets a bad rap often, even within my community, is that people in 401ks are investing in stocks the same way people invest in gold. It's sitting there and they're relying on the value generally of that account, that nest egg that you talked about, rather than cash flow. They're not investing for dividends. They're not investing for income. They're investing for capital gain, that they're hoping their gain comes through a change in the value of the asset. And that's just a hard game to play.
Right. So you probably heard this, it probably drives you nuts, but Robert will very often say he doesn't invest in the stock market, and he'll say, fools invest in the stock market. So I actually asked him about that. And what he said is, he says that so often because the way people invest.
Well, he's talking about 401ks.
Yeah, exactly. He's talking about 401ks, and he's trying to snap people out of that mentality. So he's being a little bit brutal with his words, and he's not talking about dividend investing. He's not talking about options investing. He's talking about 401ks and buy it and leave it and let someone else make your decisions for you. That's what he's talking about.
Yeah, if Warren Buffett were to die and to leave you, me, Robert, or anybody, let's say 10 million shares of his Coca-Cola stock, no one's going to sell that stock because his cost basis is so low that, he gets infinite return over and over and over. That thing's paid for itself. And the dividend gets higher. And in both real estate and stocks, you're betting on inflation. I think a can of Coke will cost more to manufacture, but it'll also cost more to buy, and the margin will get bigger. So I would predict with inflation and a good brand like Coke, who wouldn't want to own that? Because with inflation, those dividends should get higher over time. Who would not want to own shares of Apple? It's one of the greatest companies in the world. Who wouldn't want to own, some of these great brands that are just solid? That are as part of our lives as anything else. So owning a business, whether your business sells real estate or whether your business sells, Ore-Ida potatoes, and French fries through Kraft Heinz, whatever it is, these are great brands with staying power, and they're very, very valuable. The third, so I mentioned there's three. The first one is to invest in something that produces cash. That's what we like. The second is to invest in something that goes up and down in value. Trying to time it, buy low, sell high. That's a very difficult game to play. The third one is when we invest to protect. So, for example, I think people really I think Robert is misunderstood here often. Maybe I could clarify. I don't think Robert invests in gold with the idea that he's going to try and time it to buy it low and sell it high. I think Robert invests in gold to protect other parts, protect wealth. And, gold is historically, there's no guarantee in the future, but historically gold has been a store of value. Whereas rather than putting my money in dollars that seem to be losing value with inflation, maybe I hold some money in gold. Gold's fairly liquid. It's easier to get to than trying to sell a property. Gold is a nice store of value. Well, the same is true in what I will do is I'll buy a put option once in a while as insurance. So while I own that put option, I might consider an asset while it dwindles in time decay. It's going to go away someday. I still buy insurance for real estate, right? All my real estate is insured. You'd be absolutely nuts to buy real estate without being insured. So I'm going to spend money on the house. I'm going to spend money on maintenance. I'm going to spend money on things that keep it producing. I'm going to spend money on insurance. So these are billionaire concepts that apply absolutely to the stock market.